All right. Welcome everyone to the Thursday Elite Zoom training. Um, Today I wanted to do a product overview for Mutual of Omaha. Last, yeah, good morning, Annabelle. Yeah, last week we did Americo products, right? And Americo is the number one carrier for us right now in the Key Master Agency. And then it's Mutual of Omaha and other carriers. So I wanted to go down the list and do the Mutual of Omaha today. So when it comes to Mutual of Omaha, if you don't have the app downloaded, I highly recommend it. So you can go to your App Store, Play Store for Android, and I think it's Apple App Store for Apple users, and you can download an app called Quotes for Sales Professional, and it's through Mutual of Omaha. So if you just search Mutual of Omaha or Quotes for Sales Professional, you should be able to download the app. And the reason why I recommend you to download the app is because it's the fastest way you can pull out your phone and just quote the client right away if you do have a client. So let's go over this real quick. First of all, if you were to be in the engage line, all right. So there's a different tools here. You can go to SFG quotes and go to Mutual of Omaha. So this is what you can find on the Mutual of Omaha quoting tool. Even if you download the app, it looks the same. Um, I want to focus on four products today. So as you can see here, we have Children's Whole Life, and then we also have a Guaranteed Advantage, and then there's an Index Universal Life and Living Promise. So Term Life Express and Index Universal Life Express have the same exact underwriting, so I'm gonna tie this together. So those are the four different things we're gonna go over today. So let's start with Children's Whole Life. When it comes to Children's Whole Life, this is one of the, I think, best priced Children's Whole Life in the United States. There are some other ones like Gerber, Grow Up Plan, Foresters has it too. One thing I like about the Mutual of Omaha one is the underwriting is super easy and the application process is super easy. So if you were to quote somebody, and let's just say we're quoting a 10-year-old child, and with the children's policy, you don't have to specify the gender. And let's just say we put 50,000 on here. So that's about $26.75. People ask me, so, Sean, when do you decide to use an IUL for a child versus a children's whole life? So, the biggest reason why I would use the children's whole life versus the IUL is if the client's on a certain budget, let's just say they don't want to pay more than $10 to $20 a month per child, then I think whole life is a great value for the children. Let's just say they have three or four children and their budget's only about $50, then you need to be able to fit it into a $10 to $15 a month policy, right? So this is 50,000, which is $26.75. But if we were to make this like $20,000, then it will be only $11.30. So it's quite affordable. If the client wants to pay more than $50 a month or so, I recommend to put it into an IUL. We can design it with FNG IUL, pass setter, and focus on the growth of the cash value. 50 is like bare minimum for IULs, in my opinion. I would say for children's college funding, minimum should be about 100. So if somebody asks, because I'll just make the math super simple. $100 a month for 12 months in a year is what? That's 1,200 a year, right? And 10 years is what is that? 12,000? So 12,000 is not going to really pay the college. But it could help them to supplement some of those things, like maybe buying books and maybe using towards a little bit of the tuition, but it's not a lot. So that's just $100 a month for 12 months for 10 years. It's not quite a lot of money. If you do like 200, then that's about 24,000 in 10 years. So that's how you can reverse calculate how much the client needs to put in on a monthly basis for a college funding. But if the client's focus is not necessarily like college funding, but they just want a protection and a little savings for the children, then this is a great option. And one thing I like about this policy is that they have an option where they have a guaranteed insurability rider to where when they turn 18, when they go to college, when they buy a house, when they get married, when they have children, the client can double their coverage. So if they had a $20,000 coverage, it becomes 40,000 and they just pay the double the premium. The advantage of that is that the price, even though the client's age is going up, the child's age is going up to an adult's age, but they can still double the coverage without showing any insurability. I think that's attractive. So if you did a $50,000 policy and they, go to college or they get married, then now you can get $100,000 of insurance, even if your health has changed and you can't be insured anymore. You can do that. So that's an advantage that I see. So if somebody's looking for an affordable plan, I would recommend this. And another thing, you can put multiple children on the application all at once. So you don't have to write single children's whole policy for 5 children. You can submit one application, but put 5 children as insured. Since the owner is the parents, usually, or the grandparents, then you can just do one application, but it will issue 5 separate children's policy. So its underwriting is easy, application is easy, so I highly recommend that for low budget children's policy. Critical advantage. I'm not going to really talk about this because a lot of our products have living benefits like heart attack, stroke, cancer, things like that. But this is if they just want a standalone policy. This is an option. Guaranteed advantage. This is something we use quite a lot. So on the word advantage, it has AD and it's highlighted, right? Not highlighted, but capitalized. So this one is for accidental death policy. I think it's one of the best priced ones out there. So if you wanted to do an individual, you can do individual and spouse only, individual and dependent, individual spouse and dependent. So you have multiple options to cover just yourself or your entire family. Let's leave it for individual. Primary, let's put that the client is 40 years old, male, and client is looking at, and I think this product is amazing to be an add-on to a mortgage protection policy for a better coverage because the price is a lot more affordable. 200,000 is only $30 a month for accidental death. But 40 is a young age, and there's a great chance the client might not die of an accident. So then, if you wanted to add a little more value, you can add the return of premium rider, and the 200,000 is $42. So only about $12 extra, you can give all the client's money back if the client doesn't die. So I think that's a huge value. Okay, almost like a insurance with a savings feature, so that if they don't die, they get their money back. So it's gambling, but there is a safety net, which is really cool.
When do they get their money back?
Usually 30 years is
Okay.
when they'll get their money back. And then the other part to it is there is a hospital indemnity plan. I'm not going to go into it too deeply. It's a lot more complex. There's a lot of different benefits you can add, such as skilled nursing facility, home health care, outpatient surgery, ambulance, cancer, all this stuff. So if a client is specifically asking for in case they're to be hospitalized, they want things to be covered, this is a great plan, but it's not one of our bread and butters. Okay. So most of the time we offer life insurance with living benefits for more serious, critical, chronic, or terminal illness. And then you need a health insurance license to offer this, by the way. Okay. And the guaranteed advantage. So these two definitely need that. The Index Universal Life Express. This is one of my favorite IULs for a couple of reasons. One, price is really good. I think price is one of the best up there with Americo IUL. But the other thing is the application process. I'm gonna tell you, Mutual of Omaha and Americo has one of the easiest application process of all time. Mutual of Omaha one, you don't even have to put medications. You don't even have to put the doctor's information. It's phenomenal. So you can get client approved in 15 minutes with this. And when it comes to the underwriting, diabetes, I would say, is pretty common in the United States, and they have a rule. If the diabetes was diagnosed before 45, then no matter how well it is controlled or it went away, it doesn't matter. If they were diagnosed at some point and were prescribed with medications, then they will be still underwritten as being diagnosed with diabetes at a certain age. If that's before 45, it's a decline, no matter how healthy the client is. If it's after 45, client can still qualify for this product. Okay. So that's one of the biggest things. So don't just submit an application guessing, oh, maybe they will get approved, because then you're gonna be getting client declined and it's a waste of your time as well. I would, if the client was maybe diagnosed at 40 or 38 years old, diabetes, then I will go with Americo IUL, which is good if it's diagnosed after 35. So that would be an example. Also, another great thing about the IUL Express by Mutual of Omaha is that even if they're on insulin, if it's controlled and he was diagnosed after 45, then client has a chance to get approved standard with this product as well. So Americo, it's not. If you have an insulin in your record, it's an automatic decline. So that's how I kind of base it on which product I'm gonna go with. So let's go ahead and do a 45-year-old female, tobacco, non-tobacco, and let's do a $200,000. It's $144.62. To me, the IUL is a great product because it will cover the client from whatever their age is now until 120 years old. So it's not as of a gamble as a term life insurance. So that's one thing I really like. It's permanent. Number two, it has some cash value that later, even if it's not a big cash value, client could dip into it. So that's another feature. And it grows with an average interest rate of 5 to 6% a year on this. And it comes with living benefits. So you can get the critical, chronic, or terminal illness rider so that if the client has one of those illnesses, then they will be okay, right? And let's just remember this price. So for a 45-year-old female, for 200,000, it was 144. Let's go down to the Term Life Express real quick. Term Life Express is term life option, and the express means that there's no blood work, urine work. It's a non-medical product. So the IUL Express is non-medical, right? Because it has express. The Term Life Express is also the non-medical version. Term life answers, I usually never use it because it's a fully underwritten and they don't come with all the living benefits, by the way. So you just price out the client and then you're like, oh, this is the best price. So you're gonna show it, and now they have to go through the whole blood work and it can be a disaster, guys. So focus on non-medical products. So we're gonna do the same thing. Nevada, we said 45-year-old female, non-tobacco. Let's do a 30-year term for 200,000 so we can compare it apples to apples. So how much is that? It's 132.79. 200,000, 45 female for 30 years. So if this is 132.79, how much was the other one? Index Universal Life Express?
I thought you mentioned 144.
144.
44. Mhm.
Yeah. So what's the difference? Like $12? So one policy will give the client 30-year coverage. If they die or have a critical, chronic, or terminal illness, then the family gets 200,000 or the person gets 80%, up to 80% of 200,000, which is 160 grand as living benefits. But if you go with an IUL Express, you get covered until you're 120 years old. You have cash value and you get all the living benefits. And it's 144, $12 difference. So if you're a client, which one would you think is a better deal for you?
IUL Express, of course.
144.
Yeah, for sure. So to me, the value of it is if a client has a term policy and maybe they got it as a mortgage protection from somebody else, then you happen to talk to them because they filled out a lead, and you give them a call. And this is a great way for you to just say, hey, by the way, does your plan, congratulations, by the way, for getting a new home and you have a mortgage, and you have a mortgage protection. That's amazing. Now, let me ask you this, Rosario. If you didn't die for the next 30 years while you're paying off the mortgage, if I can give you all the money back plus some interest, would you be interested in that? Right? So, do you see what I'm saying? It's a very common sense, but if the price is not that different, why wouldn't they want that? Because that's what I would want for me and my family as well. So sometimes the more of this, like you might almost seem like too common sense and it's too obvious, but it's not. A lot of the times, clients are being sold a product that might be very similar in price, that is far superior, but they don't know. So, focusing on educating the clients, I think that builds a lot of trust with your clients. And you know what? If you selling a term is not bad. I'm not talking bad about term. Term is great because it's more affordable and also it serves the purpose of insuring the family during the time. But I'm just saying that if you were to sold the term first as a mortgage protection and it's been over a year, then I might reach out to them and say, hey, by the way, how's your family? How's everything going? It's been a year since you got the policy. Why don't we do a policy review? Let's do an annual policy review. And at that point, maybe you can share about the benefits of having a IUL at an affordable price versus what they have. And that could potentially earn your business again. And you don't have to necessarily stay with the same company. Let's just say you sold it with Mutual of Omaha term, but you found out the IUL price is better with Americo. Then as long as their health is good enough to qualify, then I will go ahead and apply them for Americo IUL. If the client health is not so good, let's just say they had a heart attack, stroke, cancer, or they had some kind of illness and they no longer qualify for an IUL with another company, then Mutual of Omaha term does have a conversion, guaranteed insurability conversion rider. So they can convert the term Life Express into an IUL Express. So that's another great feature. And what's amazing about the guaranteed insurability is that if the client had some kind of a disease that they just happened to get after getting the term policy, even though their health has changed, the insurance company has to guarantee to give them a conversion into an IUL. So to me, that's a huge benefit. And that is something that is available with Mutual of Omaha. Americo products are great, but Americo term policy is not able to be converted into an IUL. Mutual of Omaha term can be converted into an IUL. So if you're pitching or if you are sharing with a client that, hey, we're giving we're giving you a term because it's more affordable, but if you wanted, you said you like the idea of IUL, but just not this is not the right time, then maybe I can give you a call back in a year and revisit, and maybe we can convert this into an IUL for you. So that's another selling point you can give to the client. And another feature that some people don't know in the Index Universal Life Express product, once you get the policy, client can increase their coverage of $25,000 with a guaranteed insurability. every 3 years. So if they want to increase the coverage, $25,000 every 3 years, they can exercise that the benefit. Okay, so that's another great thing without having to stick a needle in them or get reinsured again. Okay, so these are all great products. Mutual of Omaha was the first application that I have ever written with being with Symmetry. And that one product, I got paid like $1,380 commission on a Term Life Express, and that changed everything. So I always have a special part in my heart with Mutual of Omaha, but the underwriting process is pretty easy, and they do instant decision for most of the clients. So I highly recommend it. If you have a health insurance license, you can even offer individual dental insurance. I actually have it myself. My family has it, and it's a pretty good plan. And you can also get dental, but you need to have a health license for that. Let's talk about Living Promise. Living Promise, this is by far one of the best priced final expense or senior whole life policy in the United States. I love this product. Why? Because first of all, they go up to $50,000 in face amount, which is one of the highest for a final expense. But also they go one of the lowest, only go down to $2,000 of coverage you can give the client, which is incredible, right? So you can give them as low as 2,000 or high as $50,000 in coverage. And then for the state, we're gonna go ahead and go put Nevada, and let's go ahead and put a guy. Let me just go ahead and put a guy that is 60 years old, non-tobacco. There's two. There's something called level and there's graded. Let's go over this real quick. Level means that the client's coverage starts right away and the death benefit stays the same. Graded means that the client's health is not good enough. Mutual of Omaha does not feel confident giving them a protection from day one. They want to wait for 2 years to see if the client survives the first 2 years, and then your full benefits kick in. So that's the difference of the level and the graded. Okay. So when you do the application, either you can get approved for a level, which is the best rating, or they'll approve you for graded, which is one level lower than that for clients who have some more severe health issues. And you can get flat out decline, which is that means you don't qualify for this product at all. And 60 male non-tobacco, 50,000. This optional rider, I love this feature too, because yeah, if they're only 60 years old, then you can get a separate accidental policy from Mutual of Omaha, Guaranteed Advantage. I just showed you a few minutes ago. But if the client is, let's just say 71, what happens? Guaranteed Advantage is no longer available, right? Because it goes up to only 70 years old. Then what? You don't have an accidental policy, separate accidental policy to add at a good price. Then you can use this optional rider. I don't think this is available in California, by the way, but for other states, you can add this accidental death benefit rider, and when you calculate, it'll show you. So for 71 male, $50,000 with an accidental death benefit rider. So if the client dies of an accident, it doubles the $50,000 face amount. So if the client dies of an accident, it's 100,000. If the client dies of a natural cause, it's 50,000, and it's 405. Remember the price. It's 405 with the accidental. If we remove the accidental, for the same 50,000, but just not add the accidental, it's 381. It's not that big of a price difference, right? For adding an additional $50,000 accidental death plan. So to me, it's a huge value. So if it's available in the state that you live in or you're soliciting, then I would recommend you to add this rider to give them a better coverage. And for seniors, slip and fall is a big thing, right? Car accidents, these are very common things. So I would add that. So Living Promise is one of my top final expense senior whole life products. Usually it's either Living Promise or America's Eagle Select. Usually the price is close to similar with Living Promise and Eagle Select 1. But once the client has to go to Eagle Select 2, the prices of the Living Promise is far better. Okay. So a great product also for the critical period mortgage payment protection plans. So you can help the seniors to protect their mortgage without covering the full mortgage. We have also long-term care. We don't use this as much because we will just rather give them an IUL or a term life express and have the chronic illness included instead of a standalone long-term care. The standalone long-term care is quite expensive, and this is not a plan that lasts you for the rest of your life at a fixed rate. It can go up as your age goes up. And also, if you don't get to use it and die unexpectedly without going to a nursing home or bound to a house and you just had a heart attack and died, all that money you put in goes away. So I'd rather give them something that covers death and other illnesses as well. Heart attack, stroke, cancer, things like that. Um, the term life answers, yeah, we don't really use it, but this is if you want a fully underwritten one. It doesn't come with all the living benefits, and the application is, quite lengthy, and you have to do blood work, so it takes about 30 days. That's why we stick with the Term Life Express instead. Okay, so this is the product overview. I would focus on Mutual of Omaha and Americo. You can write most of your business just with those two carriers. Do you have any questions? Let's open it up.
I have one question.
Yes, go ahead.
On the Living Promise, any of them, when you say smoking, we had a question about marijuana and if they're using
Okay.
it, if they use it often compared to not often. And I heard that it doesn't matter anymore. I don't know if that's true.
Yeah, so nationally, it is still illegal, right?
Right.
But states can have it legal. So that's where the dilemma comes in. But I'll just put it this way, Charles. If they're smoking it recreationally or they're consuming it recreationally, then there's no record of it in the MIB. And if it's a recreational thing, then maybe the client doesn't have to disclose everything like that. If it was a medical one, let's just say they have a medical marijuana card or something, and then they're getting prescribed with things, then there's a chance that that might show up in their record. But if it's most of the people would do it recreationally. So in case that happens, you probably can put no to the tobacco question and still get the client a non-tobacco rating.
But
Okay.
on some of it, when you go in there, they actually ask you the question, they use marijuana. I got me on one
Yes.
that, and if I put the marijuana, then that came back with the smoking rates.
Yeah. So there are some carriers that specifically ask about marijuana and illegal drugs, and it's kind of crazy because they tie it with like heroin and everything else as well. Some of the questions they say marijuana, heroin, other drugs. So I'm just letting you know, Charles, most likely, if the tobacco question is answered no, and you don't specifically, put it on the application that the client is a marijuana user, then most likely client will be able to get a non-smoker rate.
Okay,
But if
okay, I
you
understand.
put it on the app, yeah. So that's I'm just letting you know. Because in case like client only smokes once every couple weeks or something, and they're not really a smoker, they don't smoke cigarettes or any other things, then most likely you can get them a non-tobacco rating. Okay. Um, okay. Gestational. Yeah. So gestational diabetes means that the client during pregnancy, they might have an elevated blood sugar level and they might have diabetes during that time. So let me make a kind of a 2 points here. One, if it's truly gestational, that means they're only diabetic during the pregnancy. And once the pregnancy is done and give birth, then usually that should go away. So if that was only really within the pregnancy time and it went away and they don't have any more diabetes and they don't have to get prescribed with medication, then yes, Mutual of Omaha will consider the client non-diabetic because it was just gestational.
In
But
that
in
situation,
case,
do you click no?
yeah, so I think the question, let me just go ahead and double check the question real quick. Let's see if we can find question here. Yeah, let me just move this. Yeah, so the question is asked like this. Has a proposed insured ever been diagnosed or treated for diabetes? And then if you see the second question, diabetes before age 45 other than gestational, and diabetes at any age with, yeah, so it says other than gestational. So I'll put no to these questions on that for this reason. Okay, so gestational diabetes, if it went away, then you could put no and a client could get approved. If the client had a gestational diabetes, but if the client were to have continued to have diabetes afterwards, then that won't be considered gestational because that is already a full diabetes after the pregnancy. Okay, so that's the difference that we'll make on the underwriting. So if the client was gestational for a period of time, but no more medication, and it was just during the pregnancy, it's okay. If it's after it continued and it stayed on, then no good. MUIUL, if they had diabetes before 45, reverse it with lifestyle change, no longer. Yeah, that's correct, Cami. That's exactly what I was saying. If the client had diabetes before 45 and reversed it with lifestyle changes and no longer have it, if they have a record of having diabetes and being prescribed a diabetic medication, most likely they're going to be declined right away with a product like this. What you might rather do is go with a company either that, like Americo, if it was between 35 and 45, then you could get them approved with Americo IUL, or you might have to go with like a Forrester's Smart UL, which is more lenient with diabetes for that kind of client. Yeah, age cap on that. Yeah, so age cap on the products like the IUL Express is 75. Index Universal Life Express is 75. And so if you just go ahead and click the quoting tool, it tells you right here on the bottom, 18 to 75. The Term Life Express, 18 to 75. Living Promise is for seniors also, so that it goes from 45 to 85, which is great. And then the Guaranteed Advantage, it only goes up to 70. So that's why I was saying that adding that double indemnity accidental rider for Living Promise is a great value. Okay, and then take a look here.
I had a question
Express.
about the children's whole life.
Yeah, go ahead.
Does it function the same way like as an adult whole life? Like they have all the living benefits, there's cash value and all of that, or are there?
It has cash value, but it doesn't have the living benefits.
Okay.
Yeah. So, yeah, that's why, preferably if they can pay like $50 a month, IUL is better. But if they just want something in place, then yeah, it's a pretty good policy.
Thank you.
Yeah, you're welcome. Term Life Express, then moving to an IUL Express, is the benefit of this the guaranteed insurability from the term product? Yes. Do you know, like some people get a policy while they're healthy and suddenly something came down and they had a stroke, heart attack, cancer, whatever? Then at that point, they're considered uninsurable for a while. So having a term life express already and using the guaranteed insurability benefit, client can convert it into an IUL without having to show any type of blood work or anything like that. So client is guaranteed to get approved for the conversion.
Thanks, Sean.
I was
Yeah.
actually wondering too, sorry to cut you off.
Yeah.
So is there an age cap on what age they can use the guaranteed insurability up to? Or
Yeah,
is
that's
that
a really good Yeah, that's a really good question. I think that there is a conversion age limit. I believe
Mhm.
it's either 65 or 70. I don't have that in front of me, but that'll be a great question you could ask Mutual of Omaha. But yes, usually insurance, term insurance products, depending what the term length of the term that they got, whether it's a 10-year, 20-year, 30-year, that determines when the conversion period ends. So like as an example, I'm giving you an example on average across the board with other carriers. If you get a 20-year term, maybe first 10 or 15 years, let you convert it. But if
Okay,
you were in the 16th year in it, then they might not let you convert it anymore. So each policy has a date.
understood. Thank you.
Yeah, you're welcome. On the guaranteed issue, do you get back your premiums if anything occurs in the first 2 years? Yes. So the family will get it since that means the client passed away. So the beneficiary will get all the premiums that was paid by the policy owner, and then they'll return that with interest typically. So with like AIG and most companies offer a 10% interest on top of the money back for the first 2 years. Okay, would a pre-diabetic diagnosis be considered diabetes? Yeah, that's a really good question, Alima. So the word pre-diabetic, that is something that is a little confusing to especially new agents. So I'll make it simple for you. What do I consider really pre-diabetic versus what the clients think the pre-diabetic is? Pre-diabetic means that it's before being fully diabetic, and their A1C level is usually showing about, let's just say 5.7 to about 6-ish, 6.5-ish. That's considered like diabetic, pre-diabetic. But if it's controlled with diet and exercise, and there is no prescription of any medication for diabetes, then I consider that pre-diabetic and I would put no on the diabetes question. Okay.
Okay, got it. Thank you.
Yeah. Yeah. And if the client says they're pre-diabetic, but is prescribed with metformin or glipizide or some kind of a diabetic medication or Wegovy, things like that, like an injection, non-insulin injection, that to me is considered diabetic in the underwriting because they're actually taking medications that is for treating diabetics. So even if they call it pre-diabetic, if they're being prescribed with meds, I will put yes on the diabetes question. If they say pre-diabetic and they were never prescribed with any medication of diabetic related, then I'll put them no on the
No,
question. But make sure though, this is another important thing. I say, hey, are you taking you're pre-diabetic? Okay, do you take any medication? They say no. That's not a good enough question to ask them. You have to go a little deeper and say, even if you don't take it right now, John and Mary, have you ever been prescribed with pre-diabetic medication or diabetic medication in the past, even if you never took it out of the bottle? Because if they got prescribed with one and it's sitting in their kitchen cabinet, but they never opened it, that will still show
it'll show up.
medication on their record and they'll be considered diabetic.
Right. Okay. Perfect. Thank you. That's very
Yeah.
helpful.
Yeah, you're welcome. IUL E for child newborn. Yeah, so IUL E starts at 18 for Mutual of Omaha. So if you want to go with an IUL for children, I would suggest FNG, Pass Setter. That's one of the best growing IULs that we offer, and I think that would be the most suitable. And it's a lot more customizable. So you can customize it and choose the face amount and premium. But if it's less than $50, like we can do it, but the growth and things like that, it might not be the best. So that's kind of the where I determine should I just go with a children's whole life or should I go with an IUL is like what the budget is and base it on that. Okay. Any other questions? And we'll wrap it up. Okay. So yeah, Mutual of Omaha products are one of my favorites. Um, Application is just so smooth and easy. And I would say use this and Americo. I think those are the two best carriers we have right now, for especially for express underwriting. So I'll focus on these for your business, and you should have a good success. All right. Thanks for joining the training today, and I'll get this posted on the YouTube channel and on Engage Line. So you'll have access to watch this again or the previous ones. Last week we did a miracle product, so if you want to go back to watch that, you can also do that. So you guys have a great week. I'll talk to you later.
Hey, thanks, Sean.
Thank you.
Well.
Thank you, Sean.